From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 23rd, 2016. In today's video analysis, we're going to be taking a look at the USDCHF, the US dollar versus the Swiss franc, for our trade opportunity. First off, starting here on the daily time frame, we can see several different trends here on the daily time frame. The previous blue trend line on the left-hand side of the chart, the rise from all the way down here into the 9480s, moving all the way to the top of the chart into the 1.0300 level. And we saw a fall as the market retraced that a bit, coming all the way back down about halfway through this previous uptrend. We started the uptrend channel. Over the past few weeks, we've seen a significant downtrend, and now about a halfway or 50% retracement of this previous downtrend. A couple of things to think about in the current time frame, of course, is the green shaded area. If you follow that back in time, we can see just over the past few days, we've seen resistance inside that green shaded area just over the past 3 to 5 days. Resistance into that green zone. That green zone, by the way, is just above 9,900. We're looking at 99.15 up to about 99.50. Back in time, we could see some support in that same green shaded area back here on the left. And then you go back here where the green circle is, and you can see a lot of resistance. And then you go back a little bit more, some more resistance. You go back a little bit more, bottom of the black trend line, some support into that same area, and resistance far left-hand side. So we know that that green shaded area just above 9,900 and into the mid-99s has been a significant decision point. And that's what these shaded areas on my chart represent to me, are decision points for the market, where they have been looking to buy, sell, enter, and exit. And we can see those and discuss them in general terms as support and resistance, but they're decision points where buyers and sellers have exchanged hands and the market has changed direction. So with that being said, yesterday we saw the market push above that green shaded area. Now today, coming back down to test the top of it as support, where historically when it finds support there, it makes a rally higher, and we have seen that before. Rallying higher doesn't necessarily mean it's going to change the trend to an uptrend, but definitely would look for it to bounce back up maybe to the next resistance, which by the way is the parity level, the pink shaded area just above the chart. Zooming in a little bit more here on the daily time frame, I have Fibonacci from the highest high down to the lowest low, and the lowest low of the red trend line to the most recent high that was made yesterday. A couple of different things there. Highest high down to lowest low, put the 50% right at 99.57. That's the top of the green zone. So we challenged it yesterday, coming back down into that green zone to test back above or just underneath that 50% retracement level. The 618 of that previous downtrend range also sitting all the way up here just above the pink shaded area. Let's take Fibonacci from the low to the current resistance high. That actually puts the 236 fib right at 99.18, bottom of our green shaded area. 382, the blue zone. By the way, the blue zone is also where the 382 of this previous downtrend sits. So we have a couple of different things to think about here into this blue shaded area as support, the green shaded area as support, and the pink shaded area as our next resistance. Let's go ahead and take it on down to the 4-hour time frame. Zoom it out a little bit here so we can really see what's been going on. Of course, yesterday in the live trade room, we put this red trend line there to represent the most recent trend movement, the most recent momentum or direction the market has been going in. Higher lows and higher highs represent an uptrend. We talked about this pink shaded area yesterday in the trade room as a potential resistance, and if we were going to buy in the direction of the trend, we didn't want to buy it underneath that resistance because there was a good chance it could take a turn back down. But where would we look to buy it? If it's an uptrend, if the momentum's been moving higher, where would we look to buy it? Well, typically, you're going to look to buy something as it dips down into support. So now that it's touching back into that red trend line, we're touching back down towards the 236 fib at 99.18 of the previous uptrend leg, and into our congestion and decision zone. This becomes our opportunity for the day today. So anywhere, I think, between the 99.50, 99.50, and 99.15, 99.15, the bottom of the green zone, becomes an opportunity. So I've already taken into the buy. I'm in right around 99.35, right about in the middle of the green shaded area. Not too bad there. I do have about a 40 or actually a 50 pip stop loss on the trade. It's down there closer to the last low in the blue shaded area into the 98.85 level. So that's where my stop loss is. In fact, I put a little red line to represent where that is. So the main focus is we want to see it stay within or above the green zone, targeting parity, targeting the pink zone again, or working its way higher. The risk on the trade, and there's risk in every trade by the way, is that it breaks the green zone, 99.15, and begins heading back down towards the blue zone. I'm not going to be worried about temporary intraday spikes underneath there, but I definitely will be watching for any breakouts underneath 99.15. So for me today, as long as it stays inside and above the green zone, I'm targeting back to parity, the pink shaded area at the top of the chart, or higher. If it breaks the green zone, I don't want to stay in it too long, but I won't jump out of it immediately. A breakout underneath 99.15 likely sees the blue zone challenged. Under the blue zone, of course, we would change this back to a downtrend bias here for the U.S. franc. One simple note about another trade that I am in, Australian dollar. We've studied this over the past few weeks. The long-term downtrend, the black trend line, the triangle pattern here that we see here on the weekly time frame, daily time frame. Yesterday we pushed above the black trend line, but we're just underneath our triangle pattern. Again, there's that triangle, the red lines here on the chart. There's that triangle. We spoke about this in the trade room yesterday. We could see the yellow zone as resistance. By the way, the yellow zone is where the 886 fib of the previous leg of the downtrend is at 72.69, so that's interesting for us as well. So I am looking at selling opportunities here into the yellow zone. In fact, I'm already in it right around 72.50. So I'm in a sell from the yellow zone. First off, the target would be the orange shaded area or lower. The risk, of course, as I said, there's risk in every trade, is that it breaks the yellow zone, continues higher. So two trade opportunities. One is the buy at 99.35 down to 99.15 is still a viable option, and the Australian dollar 72.50 is the sell that I've taken there on the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.